Welcome to the Money Talks for Beginners podcast. My name is Frankie Ho, a money nerd. Each week you'll hear me talk about different ways to use money more effectively in your daily life to become a smarter finance person. Thanks for spending your time with me today. Now let's talk about money. Welcome to the 11th episode of Money Talks for Beginners. Today we are going to talk about how to use fundamental analysis to identify stocks to buy. As last episode we talked about what are fundamental analysis and technical analysis, and we also talk about briefly how to use them. This episode we are going to talk about how to use fundamental analysis for your stock picking by talking about obviously how to use them in a step-to-step process for both growth and value stocks. Also, just to let you guys know, I use a more of a top-down approach where I look at the worldwide economy or environment first, then after I look at specific industries, and then lastly individual stocks. If you want to refresh your mind what is the top-down approach and the down-top approach, please go back to episode 10 for fundamental analysis versus technical analysis for Money Talks for Beginners. So step 1, worldwide economy. So first thing we want to look at is what is the current trend and the economic health of the global economy, your own country's economy, and the countries you want to invest in. How are they like right now? What is the current trend and economic health for them? So for example, we all know that COVID-19 in 2020 and in 2021 for some countries like India and Canada, COVID-19 obviously came, and a lot of other countries also at the same time experience strong economic and financial stress on everyone, both on the individuals and the businesses in all the countries alike, where a lot of people obviously experience job loss, and a lot of business end up closing down because of the loss of profits and also because of job loss, creating a very vicious cycle where people lose job, or people that have jobs are not willing to spend, causing the profit margin obviously for a lot of business to go down. And when that happens, it just repeats, and then people get laid off, and then more people are more afraid, and then at the same time essentially creating this cycle as I mentioned before. So what does the government do? So a lot of people and a lot of government is essentially in order to prevent an even deeper recession or possibly leading to a depression for their own countries, a lot of countries decided to essentially do QE, or very similar to quantitative easing in 2008. They also printed a lot of money to give to people both in needs and people not in needs, in order to attempt to encourage people to go out to spend more, and essentially to hopefully boost the economy to prevent further damages to their overall economy for their own countries, and for worldwide. Hopefully, as each country improves, it can improve the worldwide economy. And because obviously nowadays the global economy is pretty much worldwide, right? So it's all globalized. It's no longer one country. So it doesn't really help very much. And a lot of countries do other type of stimulus package or ideas, like reducing lending requirements, reducing interest rates, to encourage more borrowing, and to reduce interest expenses for burdens for businesses and for both new and existing businesses, in order to hopefully maintain people having jobs and to hopefully create new jobs at the same time. So overall, when the government essentially issue some government checks to give to people that are both in needs and not in needs, and lowering lending requirements and reducing interest rate, pretty much like a stimulus package. Is this really a good thing? Overall, I think it's a good thing, because when the COVID-19 first hit, the unemployment rate went up like crazy. The amount of people obviously looking for jobs, it's a lot, even though it's a very narrow sector, mostly in an entertainment tourism area, but there's still a lot of people being employed there. We have to make sure we find ways to support the economy and support the citizens that's living in your own respective countries. Of course, you don't want them to starve. So, and when that usually happens, when unemployment usually is high and a lot of people have no choice, crime rate tends to go up, because as people get more desperate, they think of different ideas that they usually don't think of. So I think it's a good idea that government issue government checks for these people, which is a form of quantitative easing, essentially just printing money to give to people to spend. So overall, I think it's a good idea to do that, and also it helps support struggling businesses too, as people start to have more confidence about spending more money as the government gives out free money. So for people who obviously still have a job, who doesn't really need the government checks, when they receive their money too, they might be able to spend more too, because they know it's just like extra money and it's free money. So they're more willing to spend that money. When that happens, it should hopefully provide the necessary support for the businesses to also stay in business and to keep their employees employed too. So overall, it's a good thing. But what about the people, essentially, as I mentioned before, that don't need the money and just got the free money? Well, they're free to do whatever they want with the money. So what does most people do with the government checks? So most people, they'll obviously spend on purchases, so they buy more stuff, things that they usually don't have the money or additional money to buy, but because of the government checks, they can now buy it. So that's sweet for them. And some people would choose to use the money to pay off some debts, like student debts, auto loans, some part of their mortgages. Some people choose to save it in the bank account, making very, very, very low returns. I don't know why people do that. With the reduced interest rate, it's pretty much is way lower than inflation. So it's pretty much losing purchasing power, but some people still feel it's safer just to save it in the bank accounts. And lastly, some people choose to invest it into the stock market and real estate market, as they have more money than before to do some sort of investments. And some people even went above that because of the lower interest rate and the reduction, or I guess having less barriers to borrow more money. Some people borrow more money to invest around this time, which is pretty much like a leverage trader or leverage investor dream. So how like a lot of real estate investors, they have a down payment, and then nowadays they have even less requirement to in order to meet the requirement to borrow money to invest into real estate and then sell it out. So hence you see a lot of real estate price in the US and in Canada. Canada has been pretty high the last 70 years by now. So there's nothing new really going on in Canada, especially in Toronto and in BC. It's been going on for 7 years now about. So if you were a smart investor like myself, you would have started investing your money as soon as your own country's government announced any sort of stimulus package in order to support both, I guess, their own citizens and businesses, and essentially help people out in a sense. And that actually encourages people to use the money to buy more real assets like stocks and real estate, as there are more money chasing these type of assets than ever before. Because as your own country, or I guess the worldwide, start printing more money, the value of the money depreciates. It was worth less and less and less. So how people combat that is by buying actual real assets that has value. So stocks that represent actually the company, and real estate obviously is the property you're buying. So you would have noticed that that this is happening if you actually stay up to date by reading your own country's news or international news for seeing what's happening with the worldwide. You can also check out a lot of different types of investment/finance websites in order to look at what is happening with the stock price and the real estate price. I guess the real estate you'll be looking at your own country's real estate websites or realtors websites. They'll tell you what is happening with the real estate property value. And essentially, you can decide what is it going up, is it going down, is it going sideways. But what I've seen in North America, especially in Canada and in US, real estate prices has been going up at a much faster pace than inflation. Stock price, and mostly in the US, has been going up a double digit annually for the last 10 to 15 years now. Canada is a bit slower. It's around 7 to 8% on average, but it's still going up above more than 6%, and obviously a lot better than the 2%, and a lot better than a lot of the fixed deposits, which is like GICs and just putting money in a saving account, making like less than 0.5 to or 1% at the current moment. Doesn't make a lot of sense to put in there, but people still decide to do that. That's your choice. So that's the first step I looked at. I make sure I analyze what's happening with the worldwide economy, look at what's happening with the countries I'm investing into, and of course my own countries too, just to see